So we're actually going to look at a Forex-based example here of the exact same thing that we just looked at. So we're looking at live market structure examples and how we're going to look at various levels of internal structure and swing structure. So quite clearly, if we went to the 6-hour time frame, this would be a lower low. We had more than 2 up candles in a row, so this would constitute a lower high. We had a bearish break of structure from left to right. Price ultimately came down, putting in a swing low. So what do we know happens after a bearish break of structure? That's typically when you get a retracement up. And we have a reason to make a retracement up, because if you look a little closer here on even the 2-hour time frame, you can see that there is inefficient price action here. We have a big old fair value gap and a bunch of inefficient price action directly underneath this order block with imbalance right here. So it's not that this is a very, very juicy looking order block with imbalance. It's the only thing that we have. So if we go to various time frames, we can see that this guy was mitigated by that wick. This is not a supply zone. It's actually a black candle. I'm not a big fan of using that. I know there are others that may use that as supply. I just don't like to do that unless I really, really have to. And I feel like that's not the case here. So we have a zone of interest that we're looking at using the higher time frame swing structure. Remember, I'm not going to keep mitigating each zone down into a tiny million different supply zones. For me, because the aggressive move pulled away from here, then technically that, the down, the up, the down again, this entire area is the technical supply, the supply range. But I'm going to look at the refined zone in this example. And if it doesn't hit, well, we'll be aware that price could still mitigate part of this fair value gap and produce a structure shift, and that's still okay to look for entries on. There's nothing wrong with that. So ultimately, we have swing structure pointing down, so we're waiting for a retracement. If we get a retracement up and we see the confluence of the internal swing structure flipping bearish, then we know that chances are we are coming down to a low like this. But knowing that retraces happen following a break of structure quite often, especially when there's fair value gaps above, can we not look for longs up towards that supply for a short back down towards that new low? I don't see why not. So let's go down to the 15. So let's draw the 15-minute bearish structure out for what it is. We have a low that was put in over here. You could start with this, but guess what? It already broke bearishly. So what's the point in drawing that structure in now? I don't see a purpose. So why can't we just say, well, price came in, put in a low. Price therefore came up, put in a lower high because it touched again over here. So lower low, lower high, touched again right here. Okay, lower low, lower high, touched again, confirmed lower high, and I'll draw that as a lower low. So what do we need to see shift here before we can justify a trade up to those supply zones? Well, we want to see this pending break of structure right here. So if we get that break of structure, which we very well could get any moment now, we can start to scale into a trade. So this is where we can scale in if we feel comfortable with the idea. And I feel very, very comfortable with this idea because I'm also seeing this as a Wyckoff Model 1, which if you went through the Wyckoff series or if you go through the Wyckoff series, you will see that as well. So what we are seeing here is a move above. Now, is there a chance that price could mitigate this demand range? Absolutely. There is that possibility that we could come a little bit deeper into that demand range. We would have to go down to a lower time frame to see if there's anything in here. So I'm seeing a lot of inefficient price action. Right before the break of structure officially occurred, you had this little micro demand range. So it may not actually dip down into that inefficiency fill. Yeah, it looks like it was just going to mitigate that bigger demand range. The second that you broke structure, you had that one black candle that came into this micro demand range, and then price took off, not really giving you much of a retest. In fact, this was the retest right here, and there's a high possibility that you don't really have this sort of structural change. So if you didn't enter on the break here, I don't think you would have really got this trade. Unless you're using the seconds chart, then more than likely that wouldn't be the case. It would have been a tradeless entry, unfortunately, but it is what it is. So it looks to me that price ultimately made its way up to that supply zone on the 15. Do we get any sort of bearish structure? It looks like it was so aggressive. You almost have a crypto-based move here, even on USD Canadian dollar. Price came up towards that high, breaking structure. So there's a couple of different ways we had to look at this. I'm going to cancel that out. But there's a couple of ways we had to look at this now. The first way is that this could just be a higher high based on this purple structure drawing, and price could make a higher low and another higher high, or even like a higher low and then another higher high right now, which is totally possible. The other way we have to look at it is 4-hour swing structure is still pointing down. So this would make sense to mitigate a zone like this for a move down. But because we're structureless, it's going to be quite tricky to find a trade in a zone like this based on the move itself. That's why I always say, if you come up to a zone that you want a short or long, but you have no structure like this, it makes it a million times harder to trade it. So you may want to pass in those opportunities, especially as a beginner. So what we see here now is really, we don't have any structure to see, but we're going to see how this presents itself. So this could be a higher low based on this purple drawing. If we continued up with it, we'd have a higher high and a higher low maybe. So hopefully price takes this high, because what that would mean is that this is now a confirmed higher low. And if you lose that higher low, technically speaking, you should be able to short down for the next lower low in the 4-hour time frame. Oh, yeah. Okay. So now we have a confirmed higher low. So technically this would be the primary swing structure point that you would have to break. Now, you could also argue that, hey, I'm also going to investigate the leg between here up to here. And if we get that structural transition near the high in a lower time frame, I'm going to take that knowing that this could be a weak targeted level, and I'll take it down to at least this point. And if we break that point to follow, then I'll just ride the rest down, knowing that I caught near the top here of this 4-hour lower high, which is perfectly fine. In fact, that's how I would go about this. So if we go down to a lower time frame, can we see if there is a way to get into this trade? Well, yeah, we can. First of all, we have to break this guy, because where structure is flowing most, we have up, we have down, we have up, down, up, down, up, down, up again. So we need to start breaking something. So maybe this is where you start scaling into a trade. And obviously we're going to want to see some follow through here. Let's put it back to the 15. So it looks like this could work so far. So far, so good. But remember, technically this trend here is a new trend. Between this leg and this high, you have a new trend that formed. I'll use a different color, we use blue. So we have this guy. I'll just kind of overlap it like that. We have that guy, higher high, higher low. Higher high could be a higher low and a higher high, once again, using the internal blue structural drawing. So that is a little bit risky. So we want to be careful with this short idea, knowing that this could very well take us out. So what we've got to pay attention for is this. Okay, if we see that, we got to be warned, and this short idea may no longer be valid. Or you may want to put your stop to break even on that short idea. So let's watch carefully. So far, so good. Now, quite obviously, if we break this guy right here on the 15 with a close, then you're more than likely going to go down towards that low itself, which is a good sign for our short position. Look at that. So playing it too quickly in the 15, we might have missed something. Did we miss that transition of structure on the lower time frame? Uh-oh, we did. We missed that we had the lower low, lower high, lower low shift in structure. So right then and there, if you were paying more attention than I was, you would have gotten into that short trade, or you could have at least put your stop to break even, or even de-risking the trade to your standards. We're not that lucky. We weren't paying attention, so we still have to roll with what we have. So let's see if we survive this trade anyhow. Still a possibility we survive it. Oh, looking good so far. And we very well may end up with just that, a structure break under that low. Oh, very close. It likes it. It wants to break. It wants to break, but it's just not breaking yet. There we go. So now this became a weak targeted level. So if we break this purple higher low, then now we're talking business. We can then comfortably sit to the trade down to this low as a primary target, which is the 4-hour lower low. So let's play it out quickly. Look at that. Beautiful. So this is a perfect short trade. We did not panic out, but it also would have been fine if you had a panicked out of that trade based on that internal drawing, because that is a justifiable reason to close that trade. I want you guys to know that this would have been perfectly fine if you had exited that trade right then and there based on that internal structure flip that you've seen on the 3-minute time frame. Perfectly fine, right? In this one example, that was the better way to go about it, but you could have also told yourself that because supply in the high was not mitigated, maybe price wanted to come back for that high supply zone. Right? It was an internally confirmed supply zone, but it was still supply nonetheless. And it actually has run liquidity. So it wasn't just any supply zone. And if you look a little bit closer from a Wyckoff perspective, what did you have here? You had 1, you had 2, and you had 3 into supply. Model 2 distribution schematic right then and there into a higher time frame POI, into a 4-hour lower high area. That makes sense. Voila. Does that make sense? Very, very nice stuff. In fact, that's a picture perfect model, really. in terms of how I would like them to play out. And that really is, you can't get better than that. So obviously this is where the 4 hour put in its lower low, perhaps, maybe even lower. We can cancel the replay. I don't know where this ended up. Wow, I guess we were a little bit further back than I envisioned, but okay. So it looks like the 4 hour structure trend actually has continued bearish. And to this very moment in time on June 29th, it appears that we actually had a bullish transition in that 4 hour trend for the first time in about a month, right? So if we wipe all that, we have down, up, down, all these up and downs, the entire leg down. Ultimately, I don't need to start it way up here, but lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high, right? So we have that transition. So what do we know after a break in structure? There's a chance that price could come back for this demand range or refinement within that demand range for a pullback. And from there, we would watch the 15-minute chart for a transition. And then we can look for long trades up to the next swing high because we know that structure just transitioned from local bearish to local bullish. As you can see, there's many trades to be had when you use market structure to your advantage. And it's definitely the better approach to trading, in my opinion, because not only does it help you determine targets or entries, it also tells you when it's acceptable or not acceptable to partial out of a trade, de-risk a trade, close a trade, take profit because you've seen this, that, or this. It's a wonderful way of trading. It really is an eye opener. And once you try this, on a regular occurrence, you can only go up in terms of your